This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, June 8, 2026, and this is the New York pre-market. Now, let's get into it. The S&P 500 is down 2.5% pre-market, with the Nasdaq 100 tanking 4.8% as geopolitical tensions and hawkish Fed signals weigh on risk assets. Let's break down the numbers.
The S&P 500 is at 737.55, down 2.58% from yesterday's close. The Nasdaq 100 is at 705.6, down 4.8%. The Dow Jones is at 509.7, off 1.35%. Among the biggest gainers, Bain jumps 99.900% after a mysterious spike. EUR surges to 643.19%, and SRAX climbs to 120%. On the downside, F5WS plummets 99.8%, IPOFWS drops 99.77%, and SBTKW falls 99.6%. Sector rotation shows consumer staples leading with a 1.71% gain, while the technology sector tumbles 6.66%. The market is clearly playing defense today.
Now, let's look at the corporate news shaping the pre-market.
Core Scientific reports disappointing Q4 results, sending shares lower. No major earnings reports today, but SEC filings include 8KS from Nauticus Robotics, Avita Medical, and Nurix Therapeutics. Dividends are in play this week, with NTES, FEE, ORI, BNDC, and BBI all paying out. No major upgrades or downgrades reported today.
Now, let's check the macroeconomic data and what's coming next. The Fed funds rate is at 3.62%, with the 2-year Treasury yield at 4.5% and the 10-year at 4.47%. The yield curve is flat at a 0.38 percentage point spread, signaling caution. Inflation remains elevated, with CPI at 3.78% year-over-year and core PCE at 3.29%, both above the Fed's 2% target. The economy grew 1.62% annualized in Q1, with non-farm payrolls rising 172,000 in May. The dollar remains strong, with the trade-weighted index at 118.88. Tomorrow, the market will watch for the CPI print, with expectations for a 0.3% month-over-month rise. The Fed is expected to hold rates steady, but the hawkish tone is still present. Let's check the risk signals.
The VIX is at 21.51, up 6.11 points from yesterday. Geopolitical tensions are rising, with Iran and Yemen launching missiles toward Israel and reports of explosions at a Saudi airbase. The market is clearly on edge.
Now, let's look ahead to what's coming today and this week.
Watch the S&P 500 and Nasdaq 100 for key support levels. The Fed's hawkish stance and rising rates are pressuring growth stocks. Tomorrow, focus on the CPI print and the Fed's rate decision. The most important thing to watch, the 2-year/10-year yield curve remains flat, signaling economic uncertainty.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.